Hello, this is Derek Iswell, Chief Investment Officer for Shelton Capital Management, with another Shelton CIO Minute. Since the end of the pandemic, we've been following closely the relative performance of stocks and bonds in the U.S. market. In 2022, returns in stocks and bonds went in the same direction, downward, with both asset classes down over double-digit returns. Now, this mimicked the behavior of stocks and bonds back in the 80s and 90s and the 70s as well, the last time that inflation was at the level of concern that it is today. This chart here shows the S&P 500 and the yield on the 10-year Treasury bond since last summer. And since the return on Treasuries goes up when the yield goes down, you can see that if you flipped that line representing the 10-year yield, that returns on stocks and bonds continue to move together. Now, despite the news flow of the last 2 weeks with the Fed 2 weeks ago and CPI this week, this relationship has not broken down. The moves have somewhat confounded the financial press, who seem to be unable to reflect back on any market activity before 15 or 20 years ago. This price activity, returns the stocks and bonds moving together, means that inflation is still the most important consideration for markets, and that it will continue to do so and be so until the relationship breaks down. Thanks for your time, and if with any questions, please contact your local Shelton Capital representative. This has been a Shelton Capital CIO Minute.